All right, hope everyone's having a nice weekend. I am going to do a market update, and the agenda items for today are Bitcoin, SPY, IWM, the dollar, 10-year yield, and gold, and that's it. For the members, I did another video earlier this morning where I went into more detail on Bitcoin, some things I'm seeing on the low time frame, a few potential paths that I'm looking at, as well as the Bitcoin miners, how I'm interpreting those, as well as the Bitcoin miner index denominated in Bitcoin. So we went into a bit more detail with the subs and the members. Uh, but with this update, we're just going to kind of keep it general. I've got a weekly chart up. This is something I've posted on my X account multiple times as we were working through. This is a weekly chart, Heiken Ashi candlestick format. Okay. So if you see the price over here to the right, there's two prices because that's needed in this format in the Heiken Ashi candle. The common price seen traded on exchanges right now is 104,718, but the formula used for Heiken Ashi comes to a price of 103,690. That's irrelevant. What's relevant for the purpose of this discussion is what this candlestick potentially informs in terms of trend. And that's when I like to throw this candlestick up. The formula is a little bit different. You have standard candlestick formula that computes the relationship between the open, high, the low, and the close of the time interval that you're looking at, whereas Heiken Ashi is looking at close, open, high, low. And so a little bit different in terms of the way that the formulas calculate each of the candlesticks depending on the time frame that you're looking at. That's the variable which you control. What's important for the context of the interpretation is what do these things inform us of, and let's test it, right? And so yeah, this candlestick is typically used to give us a better idea. And there's no guarantee, right, of anything, just a better idea of potentially what kind of trend we're in. You guys all know I'm not a financial advisor. I'm doing this as education. Don't use this as financial advice. Things I talk about could go up, they could go down, they could go sideways, and I'm just giving you my viewpoints. And as I've been doing for a couple of years now, let's just look at let's look at each of these impulses individually, okay? Going back from December 22 through April of 2024, and then we're going to look at both consolidation periods, and then we're going to look at the expansion phases in between. And essentially to keep it as simple as possible, what you want to see in a firm uptrend in terms of these candles is green, right? Green candle with a long shadow on top. Okay, so wick, long wick. That's an awful drawing. I'm just gonna I'm just gonna go to the actual candlestick and zoom in to show you what we want to see. What we want to see is this. Uh, let's just go back to the beginning. Okay, our first impulse that was initiated in January. What do we see with this first candle? Right, huge body, long wick, shadow at the top. Okay, what was the candle before it? Small body, wicks on both sides. Two candles before it, small body, wicks on both sides. No trend established. Right. Uh, as we go deeper into the trend, we continue to see candles that demonstrate those characteristics. Where does the trend start changing? Where we start seeing candle bodies get smaller and you see shadows and wicks on both sides. And obviously, red indicates potential trend change. That came back the following week, and we saw those same characteristics. And then a set of indecisive trend change potential candles. But you get the gist there. As we continue along, looking at early, let me get rid of these first of all. September of 2023, coming out of that 6-month consolidation, where again the market was convinced that we're potentially going lower. I maintain the fact that this was just one huge sign of strength consolidation. And what do we see early on? This is what I care about is early on after consolidation periods or bottom accumulation periods. You don't see much decisiveness here, okay? We see wicks on both sides, wicks on both sides, wicks on both sides. And finally, breaking out of the cloud, you see long wick, big body. Big body, long wick. Big body, wick, wick. Everything's on the top side here, which is what you want to see. We don't want to see wicks underneath. In the Heikin Ashi formula, the most bullish indicator of trend is no wicks at the bottom, wicks at the top, and we continue to see that. And then we finally started to see our first wicks emerge 1, 2, 3, 4, 5 weeks before January 2024, where the ETFs came in. And that's where we had a pause, a brief correction. Okay. So there's example number 2. Let's continue along. Let's continue along. And coming out of the ETF, dump, sell the news. What happened? Well, we saw the market do exactly what you wanted to see early on, starting to see the bigger body, wick, bodies get larger. Some of these wicks get larger. As the trend continues its upwards momentum, where it stalled out is where we saw the first candle where we had wicks on both sides, and that body, in fact, got smaller. And so, interesting to note, Heikin Ashi again showed us here where potentially this trend was starting to reverse. And this one was a large, not necessarily reversal of trend, but pausing of trend and consolidation in an uptrend. And so we didn't see much decisiveness or sustained momentum of any sort in this trend. We had, kind of wicks to the red, right? Downtrend, 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 and then reversals, and then, small bodies, not large ones, not necessarily large ones, but wicks started to emerge finally. And then we started to see those candle bodies getting larger, wicks, 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 wicks on every single one, as you'd expect to see in a firm uptrend. And so where does that bring us to today? This is where we are today. The first signal of a potential pause or consolidation in the trend was December 16th, where we had the large wick on both sides, followed by 2 downs. And then we had 2 indecisives in a row. Okay, January, first week, second week of January. Now what do we have, folks? Let me zoom in. And we have really our first decisive larger body candle, no wick on the bottom, which is what we want to see, right? For looking back, where did the powerful trend from 62 to 107 started with no wick on the bottom, okay? We got no wick on the bottom here. We have a larger body. We have a wick on the top. That's what you want to see. That's exactly what we want to see. I'd be curious to see as well what RSI is on this chart. Let's pull that up really quickly. I'd be curious to see if it's over 70, because this is a more powerful chart here. It is. It is. Not surprisingly, let me get rid of that. RSI on this chart, on the Heikin Ashi, is over 70. And that's exactly what you'd expect to see in a powerful uptrend. Now, that isn't the case in normal candlestick, right? Let me show you that right now. We're still under 70. But when it comes to the Heikin Ashi, we are over 70, which I think is more indicative of the powerful trend that we're in. And so resumption needs to be the base case here. And we have to maintain a bullish bias. Meanwhile, funding is acting like Bitcoin's at 20K, 25K, people looking for false breakouts. There's no euphoria on the timeline, as I've talked about extensively. Retail doesn't seem like they're here. All the types of things that you want to see. A lot of people positioned in alts. And so the market, I think, is just going to continue to take the path of following the dominant trend, which has been Bitcoin first. I think that's been pretty clear here. And just getting rid of these guys. Um, before I do one more look at this chart, and I've done this before, but in terms of minimum targets that I'd expect to see coming out of this consolidation, I mean, the minimum technical target on this model is 142,000 and nothing less, just for this next impulse. Where's the proof of that? Well, get rid of RSI. Again, proof is relative, and this isn't a guarantee of anything. But if we just look at the character of each of these previous impulses, impulse, energy, this impulse exceeded the 1618, okay? Exceeded to the tune of the 272. Right now, the impulse that came into this consolidation, minimum target on a conservative side is going to be, again, the 1618, which is also the length of the impulse that came into the entire consolidation at 142. And so, calling for tops, there's no technical merit for it here. If anything, the minimum technical merit for a pause or a pullback or a consolidation would be 142. But I continue to contend that I believe we're in an extended fifth setup, which would then put us much higher than these targets. But let's see how the move transpires in the next few weeks and take it from there. SPY, the bulls have been in control of this chart for 2 years. And I posted and did a video on SPY a few weeks ago when we were carving out this bottom. We had a divergence on RSI that I'm not going to pull up right now. We haven't had one of those in a year and a half, and made a powerful first move. I could see a check back here would be completely healthy before resumption. And then, I don't know why I'm not hearing targets of 650, 670, 800 before the summer, because that's what this chart is telling us. That's what it's telling us is going on here. And yet we don't hear those. We don't hear that. In fact, the markets were in fear. The markets were in fear here. Fear. I don't know how that works. Fear at 580 SPY, coming off of coming off of SPY at 347 2 years ago. Doesn't make any sense to me, but that's the beauty of markets. The market makers deserve a round of applause for instilling that level of fear in market participants. But again, SPY looks very constructive. A pullback here would be completely healthy and completely normal, especially after, look at that engulfing move, right? I mean, this theoretically could be an A, B, C. I mean, we can't rule that out. Just because I'm calling this a bottom doesn't mean it's the bottom either. I could be wrong, and this could just be an A, right? B, C before resumption higher. So that's the scenario where I'm wrong. But for now, what the dollar is telling me is that I'm not wrong. What yields are telling me is that I'm not wrong. What IWM is telling me is that I'm not wrong. But again, we won't know until after the fact, because the market's the ultimate the arbiter of truth, and we find out after the fact. Why is IWM telling me that I'm potentially not wrong? The setup in IWM is a classic Wyckoff in many respects. Volume is still declining, which you'd expect to see. I expect to see volume coming in on a breakout. We're just checking back to a key level. And so get rid of that. Zoom out on the IWM chart and I'm going to show you the level I'm talking about here. This is the A, B, C, okay? This is the B wave. I always look at these B waves and say, how is the market reacting in and around the B wave to determine where I think we are in a reversal or a continuation of a trend. And what have we done since we made this low? Secondary test, spring, LPS 3, 4, 5, SOS kind of 1, ABC 2. And where is all this happening? It's above the B wave pivot. Okay. At no meaningful acceptance below it. Meaningful acceptance below it here would be bearish. That's not what's going on here. And so we have to operate under the assumption that, in fact, uh, this is just a check back, like you see my image to the top here. We have a check back to the sign of strength region. And so my next, if I'm really zooming in here, just some low time frame interpretive counts. I see completed movements for ABC and a 1. We're getting stopped at the cloud here, which makes sense. Could get a check back, create some energy for the next impulse up. Or it gaps above it. Who knows? Both are valid scenarios. The dollar, I posted this line chart up a couple weeks ago saying the dollar looked like to me it was in a exhaustive move. Measured moves have been achieved off of the lows from the summer. Consolidation, release that energy in the same manner, and then some. Okay, in the form of what looks like an ending diagonal or a rising wedge, same things. And we broke out of it, got a check back under it, and now we're breaking down. That's what we want to see. And if we're looking at that, I'm going to throw a candlestick up, overlay that in what I'm presenting on IWM and Bitcoin and the markets, and now we see, I think, a clearer picture of what we should be expecting, which is counter trend move. Remember, this counter trend move, Bitcoin went up 82%. NASDAQ went up 16%. Now we have resumption of what I'm calling trend, checking back to these EMAs that are rolling over for the first time. This is the first time these EMAs are rolling over since that region. And so, the assumption should be some type of resumption of trend down. And I think that's bullish for risk assets. Won't be a straight line. Yields are looking the same. I said the same thing with yields. I had the line chart I presented on my X account, just saying this looks like, again, measured move coming out of it had been achieved. We had a ending diagonal throwover failure. That's really bullish when you see those failure throwovers checking back here. This looks like to me all the signs of a head and shoulders type of move. So, right, we got the head, maybe we're filling out a right shoulder here, some consolidation, and then potentially a move lower. And so, again, very bullish overall for risk assets. Gold is also kind of telling us the same thing. My Elliott wave counts on gold, although I don't update as much, I've been following the counts since I've been covering gold a couple years ago. I see this as, 1, 2, completed 3, 4 triangle potentially here. Always a possibility of an A, B, C as well, or a prolonged triangle. And either way, the target for gold is much higher, 3,200 to 3,500 plus. But for now, we do have a breakout, and so I wouldn't be looking for downside. If anything, like I said, it could be a consolidative, larger degree triangle it's working on, or it's in fact breakout mode. So those are the two options I see with gold. That's the update, folks. Hope you have a great rest of the weekend. Take care.